The burgeoning American cannabis industry has captured the imagination of investors seeking to capitalize on a rapidly evolving market. Among the numerous investment avenues, the MSOs ETF, MJ Alternative Harvest ETF, has emerged as a popular tool for gaining exposure to U.S. cannabis companies. This article delves into the intricacies of utilizing MSOs within a portfolio, analyzing its strengths and limitations, and exploring complementary strategies for crafting a robust and balanced investment plan. Understanding MSOs, a thematic deep dive. MSOs offers investors targeted exposure to U.S. cannabis-related businesses involved in cultivation, production, and ancillary services. By excluding international companies and cannabis operators directly touching the plant, MSOs mitigates regulatory hurdles and navigates the complex legal landscape surrounding marijuana in the United States. Its holdings predominantly comprise multi-state operators, MSOs, companies operating across multiple legal cannabis states, providing diversification and exposure to leading players in the industry. The ETF employs a modified equal-weighted methodology, regularly adjusting holdings to ensure each company in the index carries roughly the same weight. This approach aims to prevent overexposure to any single player and provides broader market representation. However, it's crucial to acknowledge that smaller companies with potentially higher growth trajectories may be underrepresented compared to their larger counterparts. Benefits of incorporating MSOs. Several key advantages incentivize including MSOs within a diversified portfolio. Targeted U.S. cannabis exposure. MSOs provides focused access to the promising U.S. cannabis market, bypassing the uncertainties surrounding international operators. This is particularly valuable for investors seeking domestic growth opportunities within the evolving legal landscape. Diversification. MSOs offers instant diversification across diverse subsectors within the cannabis industry, from cultivation and production to ancillary services and distribution. This mitigates individual company risk and provides broader market exposure compared to single-stock investments. Liquidity and convenience. As an ETF, MSOs trades like a single security, facilitating easy buying and selling on major exchanges. This contrasts with the less liquid nature of individual cannabis stocks, making it more accessible for a wider range of investors. Potential growth. The U.S. cannabis market boasts projected high growth rates in the coming years. By capturing this burgeoning industry, MSOs offers investors potential for significant capital appreciation as the legal framework evolves and cannabis acceptance continues to rise. Considerations and potential pitfalls. While MSOs provides attractive benefits, investors must also consider potential drawbacks. Volatility. The cannabis industry remains nascent and subject to regulatory uncertainties. Fluctuations in individual company performance and broader market sentiment can lead to significant price swings in MSOs, causing short-term volatility. Limited track record. MSOs launched in 2021, meaning its historical performance data is limited. While past performance isn't a guarantee of future results, it can provide insights into risk and volatility patterns. Concentration in MSOs. MSOs focus on MSOs might miss out on the potential growth of other industry players, such as pure-play retailers or technology companies serving the cannabis space. Lack of active management. As a passively managed ETF, MSOs doesn't actively select or exclude companies from its holdings. This may lead to exposure to underperforming assets, requiring investors to do their own due diligence in evaluating the underlying holdings. Complementary strategies for a balanced portfolio. While MSOs can be a valuable tool, considering it in isolation wouldn't do justice to a well-rounded investment strategy. Here are some complementary strategies to build a balanced portfolio incorporating MSOs. Core investment portfolio. maintain a core portfolio comprised of diversified traditional asset classes like equities, bonds, and real estate. This foundation provides stability and mitigates the volatility inherent to the cannabis industry. Alternative investments. Allocate a small portion of your portfolio to alternative investments like gold, commodities, or private equity. These can offer diversification and protection against traditional market downturns. Active stock picking. Consider supplementing MSOs with strategic purchases of individual cannabis stocks that complement its holdings. Conduct thorough research and focus on companies with strong financials, promising growth prospects, and unique competitive advantages. A final note: tailoring your approach. Remember, there's no one-size-fits-all portfolio approach. Optimizing your investment strategy requires careful consideration of your individual risk tolerance, investment horizon, and overall financial goals. Consult with a financial advisor to assess your specific situation and craft a personalized portfolio, incorporating MSOs alongside other assets that align with your risk profile and financial objectives. Conclusion. The MSOs ETF offers a compelling avenue for investors seeking exposure to the burgeoning U.S. cannabis market. Its targeted U.S. focus, diversification benefits, and liquidity advantages make it a valuable tool for navigating the green wave. However, it's crucial to acknowledge its potential pitfalls and volatility.